Bank Nifty is up 270 points, so good start for the market, in line with what the SGX was suggesting.
We had a gap up opening. The Nifty opened above that 18,300 mark, but from that level, it's seen a fall of close to about 200 points.
Market still down. There is a mild recovery that we've seen from the lows above that 18,100 mark.
We've seen a 100-point recovery, which is in the process of being sold into now. So, maybe need to add one more point if there's space there by 3:30, but it's just absolutely volatile. We're going to end with about an 82-odd point cut, 80-point cut. So 4 different kind of phases to the market today.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action and 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. Indian indices see red for the second straight day, with benchmarks closing at 1-month lows yet again. Broader markets underperform, with the market breadth firmly in favor of the declining stocks. BSE companies erase a market cap of nearly 7 lakh crore rupees in the last 2 days. Reliance Retail acquires Metro AG, India's cash and carry business, in a 2,850 crore rupee deal. The move will enhance Reliance Retail's physical presence and bring a large number of kiranas and wholesale customers into its fold. Ajanta Pharma zooms 5% after sources say the promoters sold almost 5% stake via a block deal, while Strides Pharma was buzzing in trade after it received 525 crore rupees as deferred consideration from the sale of its Australian operations in 2019. Bandhan Bank slips close to 5% after investors are unenthused by the 801 crore rupee bid for the transfer of its bad assets, while Kalpataru Power gains and JMC Projects loses close to 4% after NCLT approves their merger. Diagnostic stocks, Dr. Lal's Thyrocare see profit booking after yesterday's run, which was fueled by COVID worries. Meanwhile, experts say that India's hybrid immunity puts it on a strong footing against a new COVID wave. On to the day's trading action then. The market took it on the chin for the second straight day today. The Nifty and the Sensex fell 0.25% to end what was a very volatile session at close to a 1-month low. The Nifty ending just above that 18,100 mark. The Sensex down to 40 points. Prashant is here with the day's market action. Prashant?
The market selling off and coming under pressure today once again. Keeping in line with the kind of volatility we have had for the last few sessions, today was no different. Just consider the amount of swings that we had. We started with the market making a day high, 118-point higher push. This happened in the first 10 minutes of trade. There was a 245-point sell-off and the market made the low for the day. Then you had a 100-point pullback once again. And then in the final 45 minutes of trade, there was another 65-point pullback. And the Nifty, by the way, ending about 80-odd points in the red today. I'll come to some levels which are important and what we've done today, but it was largely down. So real estate, PSU banks, metals, autos, energy, there was not one sectoral index which actually ended in the green. Nifty cuts, large caps which lost: UPL, Mahindra & Mahindra, names like Bajaj Finserv, Eicher, BPCL, Indus, and I could go on because it was that kind of a day. Broader markets, I have to say what was different was that advanced decline ratio was extremely poor. We've not had this bad advanced decline ratio for a while now, which we saw today. Thyrocare was down sharply. Union Bank, PSU banks continued their pullback, as I said. These defense names, Mazgaon Dock, Cochin Shipyard, Garden Reach Shipbuilders, they all saw pullbacks. There were also names like Deepak Fertilizer and Karnataka Bank, which lost quite a bit. For the last 5 or 6 days, the Nifty has been making lower lows, which is technically not great news. Some of the short-term moving averages have turned negative. And today, the market sort of touched and bounced off a rising trend line from the lows of June 2022. It's bounced off that level. We just need to see if we are able to hold it. It broadly comes to about 18,100. US market cues will be important, although trading there is also thinning out as we go into the end of the year. But I think tomorrow will tell us whether that 18,100 level is to be held or is to be broken? Back to you.
That is a very crucial level, 18,100. Today, we managed to hold on to it after dipping in early trade. Prashant, thank you very much for the market wrap. Let's get you some expert opinion now. Atul Suri, CEO at Marathon Trends PMS, told CNBC TV18 earlier today that India is the best performing market globally. He also believes that commodities may drift lower from their current position.
In India, every fund manager will come and tell you 12 to 15%. In the US, they'll all tell you 6 to 7%. And nothing really happens. We are the best performing market globally. We talk about 15%. Last year, we've done 5%. And US, everyone spoke of 6 to 7%. The US is down 20%. So at the end of the year, Sonia, these are all, like there are fixed templates. Nobody knows what we've been speaking about earlier, that the market has had such swings, such mega macro moves. Who the hell knew that these things are going to play out the way they did? I look at commodity charts very, very closely. I do think that commodities will even drift lower from where they are. We may have a short-term spike due to China restart in the next few days or weeks, but I do think that commodities are headed much lower. And I think that would be very, very important in actually taming your whole inflation argument.
In more opinions, Saurabh Kumar, Executive Director of Banks and Financial Research at JP Morgan India, said PSU bank stocks are coming back up after a 10-year downturn. Listen in.
On PSU banks, we believe that there is still upside left. These stocks are coming up after almost a 10-year downturn. And if you look at broadly, at least the two frontline PSUs are already hitting normalized ROAs. We are seeing positive earnings revision for them. And this is a market where basically both credit cost is generally low across the board, especially in corporate assets, which is very good for PSU banks. And there is, in some sense, a fight for deposits, which again is positive for PSU banks because these are deposit-rich entities. And we are seeing the growth differential, the ROE differential narrow between PSU banks and private banks. That should mean that over a period of time, valuation differential will also narrow. So we continue to remain positive on the public sector banks as a space. There will be volatility, but generally we think the earnings traction here is positive.
Earnings traction positive for the PSU banks, though there will be some volatility, so brace for that. Let's get to the second headline now. Reliance Retail has acquired Metro AG India's cash and carry business in a 2,850 crore rupee deal. The move will enhance Reliance Retail's physical presence and bring a large number of kiranas and wholesale customers into its fold. Mangala Malu is at the big wall with details on this deal.
Well, the news is official now. The company has informed the exchanges of them purchasing Metro Cash and Carry's India business. The deal was struck at a value of 2,850 odd crores. A little about Metro Cash and Carry. Of course, it's the Indian subsidiary of the global leading international food wholesaler. It entered India in 2003 and it was the first to introduce the cash and carry business to India itself. Where do the metrics for that company stand now? They have 31 large format stores. FY22 revenue was close to around 7,700 crores and they sell to kiranas and other small businesses as wholesalers. And this is where Reliance sees benefits. The biggest benefit they get, they further strengthen their physical store footprint. They give access to a wide network of Metro India's stores in prime locations. But importantly, they also get access to a large base of registered kiranas and institutional customers and a strong supplier network. And that exactly has been the case for Reliance, where they're eyeing the entire ecosystem. Analysts are looking at the scalability and synergies in this deal, and importantly also eyeing whether there would be any horizontal or vertical expansion of Metro Cash and Carry, which currently is into wholesale. Can it actually go ahead into retail or not? And that will be important because Reliance recently launched their FMCG brand Independence with a wide array of products like edible oils, pulses, grains, packaged food, etc. And it's this ecosystem that everyone is playing on. The Independence brand, of course, first launches in Gujarat, then scales nationally, and this asset will be important for them to scale that business nationally as well. They've been growing through acquisitions and tie-ups. This year itself, there was brands like Socio, Campa Cola, Pret a Manger brought by Reliance, and this over and above the near 10,000 crore investment that the company did in FY22. And of that, some of the important ones included the likes of 7-Eleven, Just Dial. We had a bunch of designer brands that came in, and Dunzo too. So what does all of this mean for Reliance? The big, the big ambition that Mukesh Ambani had given in the annual general meeting, saying that Reliance Retail will become the largest segment within the group. The company goes ahead and puts their money towards acquisitions. 2850 crores for a 7,700 crore rupee sales brand. Metro, not particularly bad. Analysts would just eye scalability and synergies.
The footprint in terms of connect with the retailer, I think that's one of the strongest asset which will work in favor of Reliance. If you look at this marriage, I think two things will work. One is that obviously there is a cost synergy because these all assets are sitting in the prime location. So your delivery cost and supply chain is one of the crucial asset which will supplement your front-end network.
This deal was very much in the offing, and it is very clear that with Jio as a background and Reliance Retail trying to consolidate their move very much in this particular space. And I think without any doubt, this deal is certainly very positive for Reliance, without any doubt, in the long run. But in the short run, how they transit to being a consumer-centric business house from being a B2B business house is what possibly remains a broad challenge in terms of understanding how they are going to fare.
Let's get to the third headline for the day, and this is a CNBC-TV18 exclusive. Ajanta Pharma gained 5% in trade today after sources say its promoters spared 4.6% of its stake via a block deal. The deal is likely to fetch the promoter 650 crore rupees. Vivek is standing by with the specifics.
That's right. The stock in focus was Ajanta Pharma, as we had indicated to you prior to market opening, that the promoters were looking to pair almost 4.56% stake in the company. This particular block was expected to be valued at a little over 650 crore, and the mechanism that they had chosen to pair their stake was via the block deal mechanism. So this block deal, along expected lines, just prior to market open, happened and got consummated in the block deal window. Now, two promoter entities, Ayush Agarwal Trust and Ravi Agarwal Trust, paired stake as per our sources. We understand that there is now a 90-day lock-in for further sale of shares by these two promoter entities. Remember, both Ayush Agarwal Trust as well as Ravi Agarwal Trust held a little over 14.3% stake in the company. We also understand from our sources that this particular sale was done to reduce the amount of pledged shares as far as the promoter holding was concerned.
Promoters selling stake in Ajanta Pharma to bring down their pledged shareholding. Thanks, Vivek, for that. Sticking with the pharma space, stocks like Lupin, Apollo Hospitals gained in trade on the back of positive commentary from brokerages. A bunch of pharma companies are also in focus at the moment because of the flu season in the United States. Ekta is here with the key highlights from the brokerage reports. Ekta?
Nomura has written quite an interesting report. They've indicated that data suggests there's strong demand for the drug Tamiflu, basically the generic version of Tamiflu, along with respiratory as well as antibacterial drugs. To put it into perspective, the US is probably facing one of the most severe flu seasons it has in many years, and it was completely unexpected. Now, the US antiviral market, according to Nomura, could see a potential Q-on-Q rise of around $200 to $250 million in sales in Q3. And relatively high-value drugs such as Tamiflu generic, albuterol, which is a respiratory drug, azithromycin, which is an antibiotic, all of these could benefit. Now, Lupin, according to them, is likely to benefit the most from higher demand. Separately, Kotak has also written on Apollo Hospitals, and that stock is buzzing in today's trading session. They have a buy with a target price of 5470. According to them, there are some key investor concerns, such as a delay in Apollo Health Company's fundraising. Elevated competitive intensity for 24/7 fundraising is important in Apollo Health Co. To ease out the cash drain, but the fundamentals, according to them, stay strong. So that stock is in focus on account of this note as well.
Ekta, thank you very much for that. Let's get to Strides Pharma then. It received 525 crore rupees as deferred consideration for the sale of its Australian operations in 2019. The company intends to use the proceeds to deleverage its balance sheet. Remember, the company exited its investments in Australia for 394 million Australian dollars in 2019, of which it received 300 million Australian dollars when the transaction was closed, and the balance came in now. Let's move on now to the minutes of the last Monetary Policy Committee meeting, and that has shown deep divisions within the 6-member panel. Lata is here standing by with an in-depth analysis of this great divide among the MPC members.
Yes, it was a deeply divided MPC committee, but the conclusion can be that the hawks are outnumbering the doves at this point in time. Key takeaways from each of them. Governors said that very clearly battle against inflation is not over, and the target is to, loosening prematurely is harmful, and the target is to get to 4, not just under 6. Deputy Governor Patra was perhaps the most hawkish, saying that core CPI doesn't look like falling off 6 for some time now. And even headline CPI for the next 12 months looks like lingering between 5 and 6, a distance away from the target of 4. The other RBI member, Rajiv Ranjan, said that core CPI is at 6 in spite of fuel falling. So you can imagine ex of fuel, things are bad. But he had struck a dovish note when he said that growth may be the bigger concern in 2023 all over the world and in India. Dr. Bhide, the external member, was also somewhat cautious. He said growth and inflation are presenting a mixed picture. It would be a bad outcome to underperform on both. So let's stick to the mandate and try to get inflation lower to target. That was the crux of what he said. The dovish member was really Jayant Verma, who said that growth is very fragile. The hikes we take now are going to impact growth further later on, and therefore will damage growth at a time when the global economy is also slowing down. Voted against the hike and also said that the inflation forecast of 5.4 is suspect because it's based on a crude of $100. Crude is not $100, not in spot, not in futures, he pointed out. Ashima Goyal also struck a dovish note, said that inflation expectations are coming down, inflation rates are coming down, global commodity prices are coming down, and therefore even the pressure on the rupee is coming down, she pointed out, and therefore the need now is to give growth a chance, allow the credit drought to end. Sum and substance, one member, Patra, clearly hawkish. Governor Rajiv Ranjan and Bhide could be termed as middling, and Verma and Goyal clearly dovish. So I would say the hawkish tone clearly surpassed the dovish.
Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. And this is the fourth headline for the day. Well, one of the stocks in focus was Bandhan Bank. The stock slipped close to 5% after investors were unenthused by the 801 crore rupee deal for the transfer of its bad assets. Abhishek Kothari is standing by with the details on this bid. Abhishek?
Well, Bandhan Bank has sold written-off portfolio to an ARC. So bank has received a binding bid from an ARC worth about 801 crore. That is on the security receipts. So this is for the written-off portfolio, which amounts to 8,900 crore, mainly for the individual loans that were written off. So bank shall go for bidding process as per the Swiss challenge method. Now, sources say that the bid has come from an ARC, which has partnered along with an investor. So bid likely to have come from a big lender and its ARC arm. So board meet will happen next week to get the approval for the same. Back to you.
Thank you for that. And Kalpataru Power was buzzing in trade after the NCLT approved its merger with JMC Project. However, JMC Projects closed with cuts of 4%. Vivek is here with more.
Well, some positive news flow coming in as far as Kalpataru Power and JMC Projects was concerned. The National Company Law Tribunal, the NCLT, approved the merger of both of the companies. Remember, this combined entity is now a diversified engineering and construction company with an order visibility of almost 43,000 crore rupees. The consolidated order book of both of these entities is a little higher than 38,000 crore rupees. So, what's actually happened is that the board of directors of both of the companies approved the scheme of amalgamation and the merger as early as February 2022. So one more step in the direction of both of these entities getting merged together. The merger ratio, if for the benefit of our viewers, one share of Kalpataru Power would be equal to 4 shares held in JMC Projects. And in fact, what the company has indicated is that with this particular merger getting consummated, they aim to become a $3 billion revenue organization by 2025. Analysts were quite enthused by this particular move. Analysts believe that this is now a re-rating trigger, and they believe that the merger synergies are quite high as far as both of these operating entities are concerned.
Thank you for that. And let's get to the fifth headline for the day. Fears of a COVID resurgence have put several pharma and diagnostic stocks in focus. Diagnostic stocks like Dr. Lal's Thyrocare saw profit booking after yesterday's run, which was fueled by COVID worries. Ekta is here with a roundup of how these stocks are being impacted currently. Ekta?
Thanks for that. Well, yes, the larger theme of COVID-19 seems to be playing out. So we're just picking out a couple of stocks which have in the past been, in fact, impacted by COVID-19 positively. So I'll start, for example, with Wockhardt, which has seen a large amount of volume action in today's trading session. They do have a contract with the UK government for supplies of the AstraZeneca COVID-19 vaccine. Other vaccine-related stocks include the likes of Dr. Reddy's, Zydus Life, Biocon, Pfizer. Divi's Labs has in the past been in focus on account of their supplies of the Molnupiravir API or intermediate. Cipla and Zydus Life as well, they had one of the largest portfolios of COVID-19 related drugs in India, and other COVID-19 related drug stocks included the likes of Gland as well as Alembic. Now, diagnostic stocks, as we've been addressing, have been in focus on account of hopes of higher testing. Now, however, what we have seen is that COVID-19 related opportunities have dwindled for most of them. For example, if you just look at the commentary, Divi's Labs said there was a slowdown in projects related to COVID-19. Wockhardt, their UK first half revenue was 422 crores versus 794 crores year on year. Cipla, Q2, the indicated demand for COVID-19 drugs had become negligible. Gland Pharma sales were impacted because of the absence of COVID-19 related drugs on a year on year basis. Diagnostic stocks, COVID-19 related testing has fallen anywhere between 84 to close to 97% on a year-on-year basis. And this time round, COVID-19 is not expected to be the same as well. We might be more resilient is what experts say. That is because we have hybrid immunity, which is a combination of natural immunity due to exposure as well as vaccinations. And a large amount of the adult population, in fact, is vaccinated with at least 2 doses. There seems to now be a larger understanding in the market about this, because as we saw diagnostic stocks run up yesterday, they have now come off in today's trading session. We had the likes of Thyrocare, in fact, mention that they've not seen any rise in the COVID-19 related testing as of now.
Indeed, Ekta, thank you very much for that. A stock like Thyrocare down 11% by the close, but from the day's high, Thyrocare ended lower by 24%. So that's a very sharp reversal that we saw in the share price of Thyrocare. But as Ekta pointed out, the experts we chatted with believe that India has hybrid immunity, which will play a significant role. However, there is no clarity on how long the immunity will last.
It is even more important for every country, including for India, to do a risk assessment. India has faced 3 severe wave, like extensive waves of SARS-CoV-2 or COVID-19, which essentially means the almost entire population has had natural infection and thus developed immunity. And now this is what we call scenario of hybrid immunity in India, like natural infection and 2 shots of vaccine. We also know in COVID-19, it also matters whether vaccination happened before the wave or after the natural infection. So in India, much of the vaccination has happened after the natural infection of second wave and Omicron wave also. So in this scenario, India has a condition of hybrid immunity, which is considered far better than the natural immunity, but also vaccine-induced immunity. And in that context, we can be fairly confident, though there are some unknown. The unknown is that we do not know how long the immunity lasts.
With that, it's a wrap on this edition of Markets Today. Thank you for watching.